Hey everyone, I wanted to just do a portfolio update, and sorry I didn't post last week. I was waiting for my account statements to come out. I have been anxiously awaiting to see how much I've made during December. I know December is often a lot of companies, ex-dividend date, so they often pay dividends then, like most quarterly companies pay dividends in December, as well as the monthly, of course. So I was very excited to see how much I made in December, and it was great news. I'll share with you here in a moment. So that's why I didn't post a video last week. I was like, I'll just wait until my account statements come out. I'll update everyone on my account statements, how much I made in dividends, and then I wanted to go into why I think tracking dividends yourself, and looking at it every month is very important, because it allows you to have more knowledge on and just have like simple knowledge on how much you're making and what you can do to improve it. And it also tells you things like how resilient your portfolio is to maybe a stock market correction, how that affects your dividends. You can line up the time periods, and it just gives you further insights into how your portfolio is performing, and that is absolutely necessary when you're looking at making an investment or not. I didn't do too much um, to my M1 portfolio. It's remained relatively the same. Here are the all-time returns. Of course, real estate's a little down. I'm not too worried about it. But all in all, it's doing well. I've gained $35 in dividends, and that is great for only having this portfolio for a couple months, so since September. By Robinhood, it's been doing pretty good too. So I'm down this week, but overall I'm up, I am up about $600 as usual. I haven't made too many trades here. I'm still holding on to some of these just because I think we're in a little bit of a dip here. When it comes back up, I'll go ahead and start selling these off. But as you can see, I am putting quite a bit into just big ETFs. And I've decided that I'm going to go ahead and go with the Vanguard suite of ETFs. So this is the utility one, this is the healthcare one, um, this is the real estate one. So rather than picking my own uh, kind of stocks like this, I've decided to just go ahead and buy the Vanguard ETFs. So they're basically follow kind of like this. So the Vanguard one uh, looks at real estate, the healthcare looks at healthcare, utilities look at utilities, and I'm doing ones that I think have a high yield and are also very resilient to a stock market crash or correction, or an economic recession, whatever you want to call it. I think that the utility sector, the healthcare sector, and real estate are all going to do fine. So I'll just keep putting money into these, as well as just overall dividend funds like I've been doing, as well as bonds. I have bought a share of bonds. And don't be alarmed. $6,000. You're like, what happened? I thought you were at like $5,000 last time. Yes, I was. I told you that since the cash management came out, I am going to be upping my cash that I have in here so I can up this interest earned that I got so far. I did get about 30 cents for December. That was only 15 days, and I only had about $100 in here, so it's not that big a deal. And so that's how my portfolios are doing. They're going just as usual. Not much has changed. I will update you guys on if anything does change. And as always, all the stocks that I use in this M1 pie will be in the description below. So I wanted to talk about the importance of measuring, right? So Peter Drucker, he's a famous management consultant expert, famously said, what gets measured gets improved, and That's just so true, So if you know something is not right, and you measure it, and then you can work on ways to improve it. If you never measure anything, then you'll never be able to improve it, willingly. Maybe chance it could improve, but willingly improving something requires measurements first. And so that's why I find this this Excel sheet so valuable to me is because I can come here and I can look, back to, almost 2 years ago, and just see my performance over the last 2 years. And I can also forecast my dividends. And as you can see, I've really started taking investing seriously around September, and I just kind of had about $3,500 in Robinhood until August, and then in August I put 1,000 in, and then I put another 1,000 in October, and and as you can see, the dividends have doubled, tripled, have they've just gone out of proportion. I'm gonna have to do another forecasting technique, and if you're curious about how to do that, I have made a video on it. I'll link it up in the right hand corner right now. But so tracking your dividends and forecasting your dividends, very important, as well as your portfolio value. My ultimate goal here, I'm going to go ahead and keep this value forecast that I have, and I'm going to try and stay above this line. So I'm not going to reforecast this. I will go ahead and reforecast my dividends per month, because this isn't going to be a goal. It's more just going to be what I expect it to be, if I keep my portfolio value along this axis right here above this line. If I keep it above 10,000, then I expect to make this much in dividends. So that is my ultimate goal for Robinhood. And I am going to make a new column here, and I'm going to add my interest earned. It's not really needed because it's much easier to see in Robinhood about how much interest I'm earning, and it's directly proportional to how much money I have sitting in cash in Robinhood, that 1.8%. But I will go ahead and make an interest column and just track it because I can, and because I've already got the Excel sheet up and running. For my M1, I haven't been able to forecast anything yet because I just don't have a large enough sample size. The forecast will come out, really wonky and weird, and it just won't look right. But as you can see, the dividends have at least doubled every single time, which I find, which is just great news for me, really. And so the dividends doubled each time, and that's 4 months, but the total portfolio value has only doubled about once, give or take a couple $100. So that's a great sign. It means that the companies that I invested in, last quarter are now paying me dividends. And so this is a more accurate reflection of how much I'm making off of my $4,000 per month, about $17, $20, give or take, right? So this is my M1. When I get a large enough sample size, probably around March, maybe April, I will forecast this and show you guys the progress on there, and try to carve out some goals for this portfolio as well. All in all, though, everything's doing great. I'm putting money into this one. I'm putting $100 a week, and that's just coming out automatically. I haven't really invested anything extra. In Robinhood, however, I've been making many one-time transactions, a couple $100 here, a couple $100 there, wherever I can, and putting it into Robinhood so I can up this cash number here, so I can just earn more interest on my free floating cash. And I can also use it as a credit card if I wanted to, if I want to buy something with it. But for now, I'm just going to put in Robinhood and just have my money work for me. And that's the name of the game, right? So I'll see you guys next week. I will be making a video next weekend, and I will go ahead and give you guys an update on how everything's doing. There is some big news, the Trump and Iran is going on right now, and I'm curious to see how that will affect the U.S. stock market. So I'll see you guys next weekend and have a great day.